All right, Sarah here. So this video is focusing on the personal tax checklist over here at SCL. And so with any accounting firm or any tax practitioner, you will often get a checklist from them to just help guide you through that personal tax season. What are some considerations? So this year we're using Cognito, which I think is a great platform. And so this, of course, is for clients to use as they make their submission to facilitate the preparation. But this is also available to just anyone you think that may be interested in better understanding what are some key considerations for personal tax purposes. So that's really just the first question there. And so this particular recording is to just walk through this. I know it looks really, really scary, but a lot of these inputs are there for a reason. So maybe if you're interested, just taking the time to understand what each of these lines are trying to focus on. There are some additional resources, additional links here as well, if you're interested in learning more about that. And then, of course, checking off whatever is applicable. So with the first section here, it is focusing on income inclusion. So when we talk about income inclusion, this could, of course, range from employment income, maybe business income from a sole proprietorship. It could be taxable investment income. So be it dividends, interest income that is not in a tax deferred or tax advantage account. Taxable capital gains, for example, other income, right? Benefits, taxable benefits that may be received from the government, and so on. So that's really the first particular thought. So what are these various income inclusions? And for the most part, many of these income inclusions are actually accompanied with a T-slip. So, for example, you have a list here. This isn't everything, but the more common ones I would say you'd receive in the mail would be, say, a T4 or T4A. And so if you know you get one or you have received one, of course, you would then check this off. If you're earning investment income, okay, so the institution would often issue a T5. Again, capturing either the dividends or the interest. Now, just be careful. Some institutions, if it's under $500, they are not issuing a T5, but that does not exempt you from that income inclusion. You are still expected to capture that income inclusion even in the absence of a T5. So just be careful with some of those high yield savings accounts. Okay, some other ones that you may receive if you have a disposition of capital property, T5008, partnership income, T3, right? Any distribution from trust. Now, you may receive this if you have, say, mutual funds or ETFs, right? These are examples of trust as well. And so just be careful with this particular tax season. The CRA did announce a pretty extensive extension on T3s, which will likely have an impact on T1 filing. So if you know you often will get a T3, then just be on the lookout. There may be delays, which then might impact how you file your personal taxes. So maybe some discussions needed there. Okay, I'm moving on. So if you are an employee, do you earn commission? And so that should be accompanied with a T2200 form that your employer should sign off of. Just make sure you have a copy of that. And of course, if that's applicable, then yes. And why we ask this, as an employee earning commission, you're actually entitled to several employment expenses, so tax deductions. So if you say yes and you have that T2200, then more review is needed to see what you can deduct. Okay, so then down here, so other income inclusions could be self-employment, that business income. And so if you say yes, right, then there's actually a separate section to fill out below to capture the revenues and expenses of, say, that business. If you say no, then that disappears. Okay, so then yes or no. I'll leave it yes for now just to show that. Same thing with rental income. So let's say you have rental properties, be it local, foreign, wherever it may be, but you're earning that passive source of income, then that is taxable. Okay, so if it's yes, then it's going to populate down below the considerations there. If no, then that will disappear. Investment income. So key thing here, and I've left this all open, again, you can say yes to whatever applies, but many individuals will likely have their investment income held in a tax advantage account, be it a RRSP, TFSA, FHSA. And so if you say yes to this, you do not need to submit anything in regards to that income. Your accountant does not need a copy of that, right? You will not be taxed in that applicable year. Future withdrawal maybe, right, with that RRSP, but for the current year, no. Now, if you have investments in a taxable account, so you did not deposit that in a TFSA, RRSP, or FHSA, then yes, that will carry some tax implications. Now, something to consider here, and again, I tend to talk a lot, so I apologize. Now, if you have absolute faith in your financial institution, be it CIBC, RBC, TD, whoever you bank with, Wealthsimple, and you know that you're going to receive the T slips and year-end package from them for those investment accounts, then you can run with that. That will keep your accounting bill low. There's no further reconciliation or bookkeeping needed, and so communicating with your accountant that that is what you want, then okay, making sure you're on the same page. If instead, let's say you have quite a significant investment portfolio, or you're just not that confident, you maybe have some more complex transactions and you're not 100% confident in that financial institution. Are they using the proper weighted average? Are they capturing the proper distributions? Is it actually a return on capital? Okay, so if you feel like that is the service you need, then you need to communicate that to your accountant, because if that extra level of work is needed, then that will translate to extra time spent. So if you don't want that disconnect, just having that conversation. Okay, otherwise, if no investment income earned, then, again, not applicable, or no idea. Right. And I just leave this with you to think about, either with myself or whoever you're working with. If you do not know how to answer a question, then maybe just have a chat about it. Of course, it's always nice to chat about things not during tax season, but I do think it's just important that you understand what you are saying yes or no to. So this would just allow us to flag and maybe have that very quick conversation. Okay, but let's say we're going to run with this, or maybe actually you're just fully in a tax advantage account. We then move on to the deduction and tax credit. So of course, this is the fun side of things. So after you've captured all those income inclusion, again, be it employment, business, investment related, then of course we want to reduce the taxes that are going to be paid on that. So I like to just include some additional resources there that will bring you to the applicable CRA site, right? That source of truth in terms of interpreting what the CRA thinks about these particular subjects. So if that's of interest to you, go ahead and click on that. So what are some common ones? I mean, this one isn't too common, but I guess this is the first one here. If you moved in the current year, be it for work purposes, employment purposes, even for, say, school purposes, there's potentially a very nice tax deduction available. Now, there is some criteria involved, okay, be it, the reason why you moved, it's an eligible reason, but also the distance. So you need to have moved closer by 40 kilometers, right? And in the right direction, not in the opposite direction. So you moved closer either to that new work location or that new school location. Okay, so then if that is the case, then there is probably some extra discussions. I'm sorry, I think you can hear my dog in the back snoring. So there are some extra discussions that are warranted here, just making sure that all the documentation is clear and is good to go, because it is a pretty high audit area. CRA definitely likes to ask questions in this area, and so just make sure everything is in order, and of course eligible moving expenses. Moving from that, okay, so again, this likely will just be a trigger for a further conversation. What are some other common deductions? Of course, the lovely RRSP or FHSA contributions will result in a tax deduction. So that shaves off some of that net income for tax purposes. Now, if you contributed to your TFSA, right, that does not. Okay, so if this is applicable, you probably have a slip to support that contribution, which you should definitely share with your accountant, because that just, again, is added to your file and just makes that claim ever so much stronger if sorry ever asks, which sometimes they do, even though they likely have that on file. Charitable donations. Okay, so this is actually a tax credit, which is not the same as a tax deduction, but I will spare you from that discussion. So again, yes or no, right? If yes, then just making sure you provide the charitable donation receipt. So these registered charities, and if you're not sure if that organization is a registered charity, CRA does have a database of which charities have been registered and therefore can issue these tax receipts. But just don't assume every single nonprofit or every single good, uh, you know, good intention organization can issue slips, right? Of course, donate where you can, but only some organizations are registered to issue these charitable donation slips that then is treated as a tax credit. Now, for some individuals, they are very charitable. They have many, 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 many donations. So if that's the case, then in this tracker here, the link to the toolkit, you will see just a very basic spreadsheet that you can just use to document all these charitable organizations, just to, again, help you stay organized, therefore keep your accounting bill low, right? The easier you make it for your accountant, then that will just reduce the whip on that particular engagement. Okay, political contributions, okay, be it federal, provincial, there could be some tax credits there, so be it yes or no. And anytime you say yes to something, you really should dig up that support document and make sure it is submitted, right, so that your accountant can just add it to your file. They're not auditing. We don't audit, okay, so we're not engaged to audit unless the engagement says to audit. But more likely than not, your accounting firm or your tax practitioner will request that just to have that on file. And so you should just make that available. Moving over to medical expenses. So this is another example of a tax credit, not a tax deduction. This one can get quite complicated, actually. So first off, what are eligible medical expenses? And CRA does have these are probably my two favorite resources. So listing out some common eligible medical expenses. And also, I believe this one is speaking to the practitioner. So in BC specifically, what are the allowable medical practitioners, which vary. So check that out. Now, so if it's eligible, then there's also a certain amount. So, I don't know why they make this so incredibly challenging and so incredibly difficult, but you do need to meet a certain threshold before you can even claim the medical expenses. Any good accountant would maybe just quickly double check if it's even worth your while. If you are well below that threshold, then there's really no purpose of you submitting all the documentation, because you have to appreciate anytime you submit something, it needs to be reviewed, it needs to be documented. And so this could be an area where you just, save yourself that trouble and save a little bit of that accounting fee, because you're not going to submit, 30, 40, 50 pages of something you cannot even claim. So have that discussion. Again, any good accounting practitioner, tax practitioner should be on the lookout for that threshold. And again, same idea here. There is a basic tracker, basic template available if you want to download that. Just a very basic spreadsheet where you can just document those medical expenses to make it easier for your practitioner to review and document. Moving down, so now we're at the disability tax credit. So this is a pretty significant tax credit, and it is only available to those who have been issued a certificate. So that is the T2201. If you think that this may be applicable to you or your family or to your dependent, there is a little bit of a process involved, but it isn't too bad, really. You just need to get your medical practitioner on board, right? Certain documents to complete. But once that hurdle is done, then this does open up the window for many other benefits as well, not only access to the disability tax certificate or disability tax credit. Okay, so again, you can check off whatever is applicable, yes, no, No. Okay, so in terms of the out-of-pocket employment expenses, so just make a note, we of course incur expenses every day, and you may feel like you have incurred something for the purposes of your employment, but unless your employer signs off on that T2200, you likely cannot claim anything. So that pencil you bought or that sharpener you bought does need that T2200 to support, whereby your employer is saying, yeah, I needed you to buy this. I did not reimburse you for whatever reason. Therefore, you can claim. I will just say there are not too many eligible employment expenses actually, so just being on the lookout for that. If you are earning commission, so you said yes earlier, then this actually does expand the list of eligible employment expenses by quite a bit. Okay, it may be limited, say, by that commission earned, but if that's the case, if you said yes, then that definitely warrants a bit more review here, right? There could be some sizable employment expenses that can be claimed. All right, I'm moving down over here to tuition. So this is a lovely tax credit as well. We do have now a refundable and non-refundable tuition tax credit. So of course you can have that conversation with your tax practitioner. What makes the most sense? Should it be claimed as a traditionally non-refundable tax credit, or maybe access to that Canada training credit, I think it's called. Okay, so if you say yes, then that is the conversation that should be had. If no, then no. Student loan. So if interest was paid in that year towards a qualified, I should say a qualified student loan, because nowadays there's just lots of different arrangements, but it does need to be a qualified eligible student loan arrangement, whereby that interest can be treated as a tax credit. Next, we have some pretty interesting ones. So this one is relatively new. Okay, so again, lots of extra resources here on the background for these ones. But if you incurred some home renovation costs for the purposes of, again, just allowing multi-generations to live within the same residence, there could be a pretty sizable tax credit available. This also has a whole other conversation on the potential implication to, say, that principal residence exemption. But again, this is just kind of that starting point. If you think that's applicable, you read up on it, you double check, you have that conversation. Then by checking it off, it just opens that conversation to, again, see if you have access to that credit, but also any other potential implications. Again, preserving that principal residence exemption at all costs. This one, okay, so this is important, of course. If you sold your residence in the current year, there is an extra form to file. The CRA does require this as of 2016. So even though you don't owe any taxes, you may need to file this extra form. I want to see the T2091, but to be honest, I can't quite remember right now. So it's just an informational return that needs to be filed. Otherwise, maybe you have some more complex situations, and maybe you're not going to have that full principal residence exemption on that property sold. So again, just making sure you have those conversations. All right, earlier I said if you said yes to the self-employment question, then it would populate a section below. So that is this section here. So if you have self-employment, you do need to fill out an extra form. So not nearly as bad as corporate taxes, but it is an extra form on your T1 called the T2125. And so here, just taking the time to fill out all the applicable information. Whether you have to file GST, PST, T4, WCB, right? So just making a note, double checking if any of these apply to you. And again, just some extra qualitative questions that I do like to add, because maybe that will just help with the discussion. Or maybe it's your first year and these are just some considerations to have. Otherwise, the main thing here are the key pieces of information. So the financial information that will then be used to populate that T2125. You can, if you have your own tracker, you're very organized, you can go ahead and just populate the information. Otherwise, if you want to use the tracker, again, it's available in the toolkit. It is a pretty simple spreadsheet, just trying to keep things as simple as possible. So you can use that. data enter whatever it is you need to data enter, and then it will summarize for you. So either or. So you either have it ready to go and you just populate this, or you will ignore this. You will then use, say, whatever tracker and upload a copy of that tracker, right? So however you want to communicate that information. Okay, you can also distinguish that here. Did you incur any home office or auto expenses? So this is a separate question, separate to some of these other common business expenses, because this always warrants some extra discussion, right? So for home office purposes, there is criteria that does need to be met. And so just making sure that criteria is met, because these are two very hot areas for CRA. They love to ask questions. And so just making sure you're on side, making sure you have everything in order. And here, right, double checking the criteria and then populating the relevant information. Typically what happens here is that a proration of that expense will then be treated as the business home office expense without jeopardizing that principal residence exemption, of course. In terms of auto expenses, so just making sure you are tracking that mileage. That is a question that CRA has the right to ask. And if you cannot support that, then they will deny that claim. Okay, so otherwise, other key pieces of information could be, say, the fuel, the repairs, the insurance, and so on. Whether you own the vehicle outright or you are financing it, right? So there's maybe some depreciation for tax purposes that can be claimed. Maybe there's some eligible interest that can be claimed. Or if you're leasing it, and of course, whatever eligible leasing cost that can be claimed from that as well. So auto expense is always a very tricky area, but just populating with the relevant information so that your practitioner can just double check for you. So rental income. So this is a separate form. And I will say, I'm told, and it's still early, I haven't actually taken a peek yet. For 2024, our T776 is going to look quite different. They're going to separate long-term and short-term rental housing. And I bet you can guess why they are forcing us to separate that and document that. That's a whole other discussion for another day, but the softwares, right, the forms are now helping the government by asking these kinds of questions so that, say, the government wants to conduct a certain project, they have that easy access to information. In any case, so if you're earning rental income, be it as a partial portion of your principal residence or as a separate property, then of course capturing the relevant information, the rental revenue, and any eligible rental expenses, of course. Okay. Yeah, not too bad actually. So that is it. I mean, of course, there's little bits of extra pieces everywhere. So you have multiple rental properties and just making sure you add for each property. Maybe you have multiple businesses, then just making sure you fill out this form for each business and so on. So just taking the time to read through. I know there's a lot, but hopefully one, it makes sense. Two, you are able to answer that yes or no. And if you're not sure, then again, as scary as taxes may feel sometimes, this is something that comes up for everyone every year. So just, maybe research, right? Double check, reach out if you need to clarify anything, and just making sure you're clear, right? So that the next time you fill it out, you know exactly what it's alluding to. Otherwise, if you are filing with SCL, the deadline will have to be April 4th in terms of submitting the information, because I will be away April 16th, unfortunately, till May 2nd. So just making sure you get that information, the checklist in, the supporting documentation in. Otherwise, if you're doing your own thing, of course, just making sure you, understand, some pieces of this, and then you can file your own taxes. I have a separate video on a sample walkthrough that I did with a bunch of high school students recently, just showing them one of the free softwares out there, like Simple. Or maybe you're working with another practitioner, then of course using their checklist would probably be a better idea. But if they don't have one or you want to leverage from this, of course you're welcome to. You can save a copy and you can actually submit as well. I don't mind. You will then get a copy of it on your email. You'll get a copy PDF, which again, you can keep for your own records. I just ask that you just make it very clear that you do not plan to engage SEL. You're going to do your own thing, and therefore we're not chasing you and bothering you for the relevant information. All right, so hopefully that is helpful, and good luck with this personal tax season. Cheers.